All right, AI bubble, AI is dead, stay out of AI. Check out today's winners, right? It's shining pretty bright on AI in all facets, right? You got some memory with SanDisk, right? You got optical stocks, you got semiconductors, you've got infrastructure names. These stocks they're more than havens, folks. They're remaking the world, and believe me, the trade is not over. Now, by the way, speaking of remaking things, I teased this earlier in the show, the S&P 500, big changes to the 500 and 100. So, in the 500, in Vertiv, Light, Coherent, SATS, all of these associated with the AI, two of them optical names, and of course on the S&P 100, these are the big hefty names, Micron, Lam, Applied Materials, and GEV, which a lot of our folks on the show love these names, and this is the way it goes, right? By the way, great news for my next guest, at least for her clients. I want to bring in now Bokeh Capital Partners founder, CIO, Kim Forrest. Kim, you know, I want to share the audience this story though, because I didn't notice until I read your note. Coherent, which by the way you gave last June and this January, stock is up huge. But this is the story of reinvention. This was an industrial company. The last quarter they had no growth there. They reinvented into the data center communications, and the business is going great. I just kind of love this about America in general, but it's good for your clients because this stock is doing extremely well.
It is, and it's because it's managed well. I mean, you're right. Its roots were in growing crystals that are used in lasers that cut steel. And they parlayed the success in that and buying other companies. And one of those was Coherent, which they adopted their name relatively recently. But this is a great company that knows how to serve their clients, and their clients are now data center clients and telcos as well. So that's all that optical networking that is making data centers operate faster and with more throughput.
So you had that already. It's up again, obviously getting a bit because of this move. You had Micron already. Are you still long Micron?
Yes, we are. And just because it's leveled out, we're really not a momentum sort of investor, right?
Okay.
So I don't care that it has leveled out. I'm looking into the future, and I know that their products are going to be in demand for a very, very long time. Even though AI may wax and wane with respect to big data center build out,
right,
it's still going to be needed to deliver information from the data center back to us using it. So that's why we continue to hold names like Micron and to a lesser extent Coherent, where they're new to data center, I guess.
I know you're spying the financials. I got to pull up a chart here. So these are your sectors, 11 sectors. At the very bottom, financials down almost 8%. They've stunk up the joint.
Big time.
I mean, I'm concerned about private equity risk and maybe something else I don't know about. What are you saying that makes you think this is an opportunity?
Sure. Well, we tend to use time, not timing, right? So if I enter a little bit early to a sector, I'm not terribly upset about that. That being said, a lot of the names that are blowing up right now are very concentrated private lending, right? And banks can't have that. They really have to spread lending around. They have a lot of risk analysis. So the things that are happening in private credit are unlikely to show up in these, more public banking names because they have so much compliance and regulation.
Right,
and that's what gives us comfort to look at them.
Okay, although I will say Jeff, which is not one of your names, looks like it might be more vulnerable than others. I don't have a lot of time. I'm going to pull up a couple of charts back to back because PNC, obviously a Pittsburgh native, you're partial to PNC. And again, PNC, it's cracked under its key moving average. I know you're not trying to pinpoint bottoms, but it looks like it's a little weak here, right? And Morgan Stanley, again, another ugly chart. We'll bring that one up as well. So the way you go about this, you start to build a position. You don't go all the way in, I guess. You would start a foundation here.
Yes, and well, we add whatever we think that, it's on sale. So as you point out, they look terrible on charts. The companies have been trading down. What both of these companies have in common is that they don't necessarily make a whole lot of money lending, which is the difference between what people are, paying them back at the interest rates at difference of what they're borrowing at, but they have a lot of fees. And that's why we like these companies is the fees are a little bit more stable than depending on what is going to happen with interest rates.
Oh, great point. I just go back to the old days when they said just lend out money and give you a toaster, but I think those days are gone. Kim, thank you so much. Appreciate it. Always love our conversations.
Always.
Thanks a lot.
Thank you.